Welcome to Startup Sim. In this tutorial, we will look at the liabilities and equity of the home office. The home office may have some account payable, which is essentially the tax that is paid in the following quarter after the one when you made a profit. Otherwise, it may have supplier credit if it has spent money and it didn't have enough cash left in the bank. The home office bank may extend a supplier credit just like it did in the other areas. Therefore, current liabilities will be the sum of these two elements. There may be, though, other long-term liability in the form of a loan taken by this company from another company, or a loan taken from the Bank of Switzerland, which is typically extending loan starting after quarter 4 or quarter 5. The facilitators will tell you, but there is no possibility of issuing long-term bonds in this particular startup run. Therefore, the total of liabilities for the home office will be the sum of these elements. Then comes the equity. The equity is the main activity, you could say, of the headquarters, because it is the place that has raised money, raised capital from investors, and this is the initial capital. And then some more capital may come when the company pays dividends. Typically, the shareholders will return some of this dividend in the form of further investment into the company, and possibly retained earnings. Retained earnings in the home office is rare because the home office is primarily a cost center. It has limited income, but it has large expenses like research and development and market research. You may want to consider moving money around from your areas to your home office, but of course then you have to look into what is allowed. You can't do any movement. This is somewhat regulated, and you can ask the facilitators for help in this area. Unrealized gains and losses have to do with fluctuations of currency rates against one another, because when one invests in dollar, the dollar will go up and down relative to Swiss francs, and this is reflected in this slide. We will say more about this when we discuss foreign currency statements. Total equity, of course, is the sum of all the four elements above, and then added to current liabilities, to total liabilities, we come to total liability and equity, which is equal to total assets, because again, a balance sheet has to be balanced.